Welcome back to the Ticks and Trades channel and a weekly recap for the week ending Friday, February 13, 2026. My name is Sam and today is Sunday, February the 15th. We had a down week overall. We're looking at this last candle here on the weekly chart of the SPY. Price has been hovering under this big psychological level of 700 for the past 6 weeks or so, in the big picture at least. And the bulls keep getting rejected and pushed down every time they get close. Last week, we talked about the DJT, the Dow Jones Transportation Average Index. We said that the way price was extended to the upside, it was entirely feasible that 20,000 was the target, and there was a high probability that price would fall from that area in a bigger way. You can see here on this weekly chart of the DJT that they did exactly that. We drill down to a 4-hour chart. You can see that the milestone of 20,000 was actually hit on Wednesday, and by Thursday, they were falling. And we talked about how what the DJT does, the transports, that tends to be a foretaste of the greater market, like the SPY. So if the transports hit 20,000 and fell while the SPY was also hitting 700, then we could reasonably expect the SPY to pull back as well. Let's look at the daily chart of the SPY. When the transports had reached their target of 20,000 and started falling, the SPY had not quite reached 700 yet. For pretty much the entire week, each morning, here's Monday here, each morning was a gap up from the previous day's close, and they crapped out and kept closing lower and lower each day. They gapped up in the morning and then closed lower by the end of the day. By Thursday, they were following the transports and giving in to the bears. Plenty of selling going on as they kept forcing price lower. So is 700 off the table? No, not quite. While price on this daily chart is below the 50-period moving average, the blue line here, as well as getting below most of the other moving averages on the smaller time frames, the big picture is still bullish. Going back to the weekly chart here, all they did was test the 20-period moving average. They're still way above the 50-period. And of course, on the monthly chart, there's really nothing bearish going on here. But what could tip the market? Because as we've been saying, there's plenty of room on the downside for price to reset and the big picture to still be bullish. Let's look at all this space here. Well, if we start back on the daily chart of the SPY, remember how we've said a few times in the game plans over the past couple weeks that falls and pullbacks tend to happen from the lows or from intermediate lows, not highs. But if price gets pulled down to a critical area and the bulls can't defend that area, price can start to fall in a bigger way from there. So where is that area? Well, we've talked about before, while 700 is still on the table and what happened on Thursday this past week could be a fake out, let's talk about the first line in the sand where the bulls need to step in to prevent a bigger fall. It starts at 675 and maybe down another couple dollars. We'll say 673.50 for now. So the zone between 675 and 673.50, the bulls need to keep price on top of that for 700 to still be a target or valid in the near term. They don't have to get to 700, but there could be renewed vigor this upcoming week by the bulls to try again and finally break above this overhead resistance that they keep hitting on the highs here. So keep an eye on the transports this week. So far, they have retraced a good portion of Thursday's down move, about half or so at this point. So if the SPY follows suit and the bulls can get another rally going, 700 and possibly higher is still the target. If things get stagnant and the bulls get priced down to this 675, 673.50 and below, that could open the door to a bigger pullback. We need to see daily closes under 673.50 or so, basically this whole zone, before we start that conversation. So that's where we are in the big picture. Now let's look at how our levels worked for this past week. They worked every day except for Thursday, I guess except for Tuesday. The no levels were hit, no trades were taken per the rules. But the bearish momentum on Thursday was just too much for the bulls to handle. And a couple of our levels and some points were given back to the market. It was substantial enough to make the entire week in behind the curve. So why don't we look at that offending day in detail? Here is the page on the Ticks&Trades website where each day's levels, the game plan, and the resulting recap is posted, the daily recaps page. So Thursday, the 12th is right here. That was the day of the bloodbath, so we'll dig into what happened. So we had a couple zones on the board that morning. Those are the dashed lines. They're designed to be gauges to see if the tone of the market is going to be bullish or bearish. Kind of gives you an idea. If price could get above the top of this zone, this top zone here, and close candles of significance above it, that would be good for the bull case. And if price got below this lower zone, that's a little bit different color here, and started closing candles below it, that would be better for the bear case. You can read through this game plan yourself, pause the video if you need to, or just go back to this page on the Ticks&Trades website. And then here's a screenshot after the closing bell. The axis zones here did constrain price. It went up to this zone, pulled away, came down, bounced off the bottom one, but we did not trade against them per the outline of the game plan. Would have worked pretty well if we did, but getting below this lower zone told you that the bears were likely in control at that point. That's the purpose of these axis levels in zones like this. Plus, if you were keeping an eye on the DJT, the transports, you would have known that they had started to fall from 20,000 about this time. The first tradable level was hit at 687.51. I could zoom in here by clicking the screenshot here. It did not hold. The bulls were not fighting at this point. The same thing down at 685.75. They started to fight below that level, but it was too late. We had a line in the sand. That's our maximum loss limit. So with these two levels averaged in, for a long position, the trade was closed out at a 40-point TKO. That's what I call it, a technical knockout. The next level down came into play after jumping out of that first trade, and that one did provide at least a base hit. If you read the analysis commentary below these screenshots, you will see that I took this long trade myself, and down here at 683.98, and I held on for more like 10 points. But the entire day was still a loss, though. Overall, it's just part of trading. When you have an edge that you use, you have to trust it and accept all outcomes. The long-term performance is what matters. So feel free to check out this page if you want to dig into the details and read through all this. There's a screenshot of the transports. There's 20,000. Just want to give you guys an idea of this offending day here for last week and how it put the week behind the curve. This is the recap commentary for Thursday. So over on the tracking log again, so the rate of return for the year has been pulled back a little bit as a result of the other day. So 12.35%. If you look at February as a whole, though, it's pretty good overall, halfway through the month. And the rate of return for the past couple weeks is just over 5%. So if you recall that January, the entire month of January was only 7%, a little over 7%. So both months here together this year, 12%. Isn't too bad. We've got plenty of time, plenty of trading opportunities ahead of us. There are levels to trade against each day, every day, and over time, about 80% of the trading days end in the green using this approach. So let's see where the win rate goes as 2026 gets underway. I'm pretty confident that this 72% here is going to start to climb before too long. So that's a wrap for this week, Monday, February 9 through Friday, February 13. Tomorrow, the market is closed for President's Day, so we won't be trading anything tomorrow, but we'll be back in business Tuesday morning, February the 17th. If you want to get these levels for yourself each morning and a game plan to help map out the day, you can do that over at the Ticks&Trades website, or shoot me an email if you have any questions. I'll be happy to help. I'll talk to you next week. Stay alert, trade well, and have a good week.